Alright guys, let's get started. It's the 28th of November. It's Monday, the beginning of a new week, and of course we're going to do a very quick market roundup, but I want to talk about Binance, but before that, a quick market roundup. Alright, so we have the market starting to correct already, something that I expected, and in my previous analysis I was actually talking about a correction coming, a bit of a pullback in Bitcoin and of course in Ethereum and pretty much all of the other cryptocurrencies because Bitcoin is really driving the market still. Ethereum is actually looking a little more bearish than Bitcoin. We have here the stochastic RSI looking really bearish right now, and the markets are also starting to get really tight, so soon they will be printing a bearish cross. So I'm expecting a bit of a bigger pullback on Ethereum than on Bitcoin. Bitcoin is looking a little bit better. I mean, the stochastic RSI is pointing out to a pullback, but the markets are still looking good. The markets are actually, they recently printed this bullish cross, so I'm expecting that we're gonna have a minor pullback and then perhaps another push on the upside to retest resistance again. So far we do have the 16,000 as a quite a strong resistance. We are unable to get there, so perhaps another attempt and then another rejection. We're going to talk about this when we get closer to that. So Ethereum is 3.5% down today. Bitcoin is 2.22% down today. BNB is 6%. It's doing a bit of a bigger correction, and that was also to be expected. BNB actually surpassed my target price. I was having $307 as a target price to take profits, and I was taking profits around that level. We did go to around 312 yesterday, so we did surpass that, but of course today we're doing that pullback which I was expecting, and I'm waiting now to reaccumulate. I'm gonna analyze the charts. Maybe in my next video I will actually include BNB in my technical analysis. We also see XRP down 6%, Doge is almost 10% down, much bigger pullback. Cardano, Matic, both of them just over 4% down in the last 24 hours, and that's the top 10. Alright, now let's move on to this topic here, because in the wake of the FTX's collapse, CZ of Binance urged exchanges to demonstrate their reserves, and most of the centralized exchanges actually followed his direction. Binance just now released its proof of reserve mechanism on the 25th of November, just a couple of days ago. This comes about 2 weeks after the exchange already said that it will publish a Merkle tree proof of funds. So far so good, but I mean, Kraken, Bitfinex, BitGet as well, they published theirs pretty much straight away, like 2 weeks ago, but others are yet to do so. Bittrex, Poloniex, PrimeXBT have not done it, and actually many exchanges are still not ready with their own proof of reserves, leaving room for more speculation about who might be the next exchange to crumble. I mean, Coinbase is also under the microscope, especially by CZ, who recently questioned the Grayscale holdings in Coinbase custody. This tweet, actually, this is the tweet, and it makes it look quite alarming. It is based, I think, on incomplete data, so I personally found this to be quite unprofessional on his part. He says, so Coinbase custody holds 365,000 Bitcoin for Grayscale, and 4 months ago, I assume the exchange Coinbase, he says, had less than 600,000 Bitcoin. And then he's saying, just stating news reports, not making any claims. No, this is a claim, actually. This is a claim. And I feel that this is based on incomplete data, which he acknowledges. He says Glassnode probably has more up-to-date data. And not only that, but he actually deleted this tweet. This is a screenshot of the tweet. He deleted this tweet and later posted this, where he actually confirmed that he was using wrong data. He said, Brian Armstrong, who is the CEO of Coinbase, just told me the numbers in the articles are wrong. Deleted the previous tweet. Let's work together to improve transparency in the industry. Okay, CZ, but you have nothing to do with Coinbase, right? So I don't really see the point of you even tweeting about Coinbase. It's one thing what you did with FTX, which is literally bring it down in a matter of days. And of course, FTX already had all of these problems. It's not really your fault that there were bad actors. But at the same time, it costed billions of dollars worth of losses for all of the users. So I don't really see this as being exactly the right thing to do. All of these things could have been handled in a different way, not so publicly, and not causing all the FUD that happened that actually managed to bring FTX down in a matter of a day or two. FTX could have gone down slowly, and it could have been a bit better for the users who might have been able to take out a lot of funds before it collapses. But that kind of a quick collapse of FTX and so public, it's on you, CZ. It really seems to me like CZ is going after the competition, and I don't really know how I feel about it. I mean, the industry is better off with more competition, less centralization. So, anyways, while we're waiting for the Coinbase to bring on the proof, Binance users are now able to check their Bitcoin balances on the trading platform against Binance's own Merkle tree, or via the URL supplied by Binance. Independently, users can also verify the code by pasting it into a Python app and running it through a series of checks. Initially, the proof of reserve system will only support Bitcoin, but additional tokens and networks will be added in the coming weeks, Binance said. However, there has been some criticism, of course, as this article here in AMB Crypto correctly points out. The CEO and the co-founder of Kraken, Jesse Powell, claimed that this proof of reserves was not complete. He tweeted that the total liabilities of clients, user verifiable cryptographic proof that each account was included in the total, and signatures also verifying the custodian's authority over the wallets are all necessary for the full proof of reserves. Powell also pointed fingers at other participants who have neglected to include accounts with negative balances. I think crypto.com was one of those. And then CZ responded in this tweet. His answer emphasized that the third-party audit will adequately address Powell's concerns on the proof of reserves. But the key takeaway from this is that exchanges have become increasingly less reliable over time. And while we always knew the risks of hacks and other exploits of their systems, we weren't really expecting that they would handle our money as they choose. This is why FTX wasted billions of users' funds in their own investments into third-party businesses. It's one of the reasons why they lacked the liquidity to meet users' demand for withdrawals. Typically, users' funds are not given to the exchange, they're simply brokered there. However, as we saw, this isn't always the case. And this emphasized again the importance of keeping your coins in your own self-custodial wallets and only temporarily parking your crypto on an exchange for trading purposes, but never for long-term hold. The sales of hardware wallets have jumped a lot since then, and with Black Friday and Cyber Monday sales ongoing, I hope you did get your own device. If not yet, use my discount codes from the description below. The wallets that I use are Ledger, SecuX, Trezor, Keystone of course, and the Keystone offer that I have personally for an extra discount for the Crypto Corner community. 35% off right now, more than any of its competition, so that's the best deal right now. Just apply the code BusyGeorgie at checkout and you can find it in the description below. You're basically saving $59 on the Pro device. And I just picked a winner of the giveaway. Keystone, as a partner of this channel, actually ran a giveaway, and we picked the winner yesterday. I announced it on my Twitter, so for those of you who entered the contest on Twitter, make sure that you go and check out who won. It was a random, and I did actually have to go through quite a few profiles to see if everyone followed the rules exactly and if they're genuine profiles and the people they tagged are also genuine accounts and everything, because I did find quite a few discrepancies and I had to basically reject quite a few of the winner picks because I was using an automated tool. Anyways, there will be more contests coming up, there will be more giveaways, so even if you didn't win this time, make sure that you continue watching this content here and you continue entering my contests. I run at least 4 or 5 contests a year. Over the course of this year, we run at least 4 contests. I think this is the 5th one, and then of course next year I'm going to be running more of them. Sometimes you're winning hardware wallet, sometimes it's pure crypto, it's like $50 in this coin, $100 in that coin. These are the kind of contests, so definitely make sure that you're subscribed. If you're watching this for the first time, if you're just finding this video podcast, I post 3 times a week. Make sure that you're subscribed, you have the notifications on as well. Now on to the next topic. Now this is a good one. It's basically an app that is paying you in tokens for every calories that you burn. They call it burn to earn. You're probably familiar with this concept already. It started as play to earn, and now there's all kinds of different types of this model, which is quite a new thing, and it's quite a popular one as well. So here you're basically going to be motivated to stay active, and as someone who struggles with motivation when it comes to fitness, this sounds very appealing to me, right? I try to go to the gym at least 3 times a week, but I only manage this in the 3 months of summer or 4 months of summer when I'm at the beach and I really need that boost of body confidence. And then in the winter I'm bloated like a pug, which I hate. It's stupid. So this is the world's first burn to earn application, and it might be the thing that I need to motivate me. I might also be the first broadcaster talking about this, so it makes me very excited. It is a Web3 fitness app that lets you earn tokens by working out and burning calories along the way. The platform's fundamental utility token is called CAL, cow, for calories of course, so the user rewards come in cow tokens or CAL tokens, which have a limited supply. A total of 2 billion tokens is the maximum supply, and from their token allocation graph that I see, it's about 30% that are going to be available in pre-sale at various rounds. That's around 600 million tokens. There are also utility tokens that can be used to buy products and services on the platform, such as gym memberships, supplements, accessories, and others. Also, users are carrying a gamified t-shirt NFT on the FitBurn platform, and this is how they earn the calories token. To start using the app, you buy one of these NFT t-shirts. There are 4 types and they're ranked by rarity. Obviously, the more rare your t-shirt is, the bigger the amount of calories that you get to burn, meaning you get more tokens per day. Burnt calories are converted into CEL tokens, hence why they call this model burn to earn. We saw this with Steppen as well, a similar trend forming, so this is cool. In fact, FitBurn made the idea of monetization of sports exercise even better than Steppen. So people are not limited by the type of sneakers that they have to order to start earning. With Steppen, if you are familiar, you choose a type of a sneaker, and this is according to the type of exercise that you will be doing. If your speed exceeds or falls below the activity range of your selected sneaker, you will stop earning tokens. And that's not the case here with FitBurn. So I see it as an improvement. To track the calories burned, the app uses data from your phone or your smartwatch or bracelet sensors, like other fitness apps that you might be familiar with. And the CEL tokens will be bought inside the app. This is after the launch, of course. As of right now, they're in pre-sale and you can only get them from this page. This is the sales page, and I will have the link in the description below. At the moment, the project is already supported by Mr. Olympia, one of the largest bodybuilding contests, and FIBO as well, the world's leading trade show for fitness. These are the 2 key strategic partnerships that bring the brand more visibility and credibility, of course. They also just received the award Best Exercise to Earn Game of 2022. From the AIBC summit in Malta a few days ago. If you remember, I was talking about this summit recently and I highlighted the importance to attend such events so you can find cool new projects and expand your network. Well, this is a great example of exactly that. Also, FitBurn is backed by Firechain and Swissborg. Swissborg is another project I talked about more than a year ago on this channel. As always, I feature all the hottest new projects here, so you get to hear about this first. And another thing that I like a lot is that the governance of the project is going to be decentralized, overseen by a DAO, a decentralized autonomous organization. In other words, the community, the users, and also the holders of these tokens get to make key decisions for the future of the project. Effectively, the DAO will determine the project's development and monetary policies within the FitBurn ecosystem. And this is how we can move on to a more fair and democratic way of handling control over the platforms and the services that we're using. This is what blockchain was invented for in the first place. And in regards to their native token, it is right now in the private sale, and that's always the best price that you can get any token at. The price of this round is, as you can see, 0.018 cents on the dollar. And like other Web3 services, you are connecting via your Web3 wallet, like MetaMask or Wallet Connect, for instance. You can then buy the token, and the vesting period is 16 months, as we can see here. Also, there is a cliff of 1 month, and the monthly release is going to be 5.8% on a daily linear vesting basis. And also the link for the white paper is also here. You will need to go through a KYC. As you know, with ICOs and new launches, it's always the case now that you have to undergo KYC. And also, of course, go through their white paper. It's always good to get really familiar with a project that you're investing in, to understand what they're doing and why you're investing in them as well. I always say that. So these two links, which are quite important, are all here in that link. This is going to be the link that I will drop in the description below for you. The truth is, with this bear market entering its last phase, this is a good time to get in early on these new projects that are just starting and building their ecosystem. So once the bull run begins, they will have an advantage. This is what happened in the last bull cycle. It will happen again in the next one. So I'll drop the links to the website and to their token sale. Make sure that you grab this from the description below. Alright, well, this is everything for today's episode, guys. Thanks for staying until the end, and if you like this, please show your support, leave a like and a comment below, or share it with someone else who would benefit from watching it. And also make sure that you check out the links in the description, where I drop the links to all of the crypto services that I'm personally using, all of the things that I'm covering in my videos, like links to the projects that I was talking about in this video. And also, while you're here, just pick another one of my videos, and I'm gonna see you in the next one.